This video is a review of Mitsui & Co.'s fiscal year 2025 first half financial results, the period from April 2024 to September 2024. Mitsui & Company, often referred to as Mitsui Bussan, is one of Japan's largest and most prominent general trading companies. Mitsui & Company operates globally across industries like energy, metals, chemicals, and technology, with diverse investments and a strong role in international trade and development. FY2025 first half overview and second half outlook. Progress was steady against the full-year business plan for core operating cash flow, or COCF, exceeding 50% for the first half. Core operating cash flow refers to the cash generated by a company's core business operations, excluding one-time or non-operational cash inflows and outflows. Progress was also made in asset reconfiguration through the sale of large-scale assets and listed stocks, and cash inflows expanded from both operations and asset sales. In addition, Mitsui decided to flexibly make additional share repurchases, observing cash inflows and share price levels, being conscious of balancing investments for growth and flexible shareholder returns. Based on the progress made in the first half and the latest forecast for the second half, the full-year profit forecast was revised upward. In particular, further strengthen existing and new businesses focusing on liquefied natural gas, mobility, healthcare, and protein, which will be the main growth drivers during the current midterm management plan. Progress rate is 50%, and first half financial results came in as expected. Summary of operating results. Core operating cash flow increased by 63 billion yen year-on-year to 538.1 billion yen, and profit decreased by 44.5 billion yen to 411.8 billion yen, both showing good progress against the business plan. Taking into account the progress made in the first half of the fiscal year and the upside expected in the second half, full-year profit forecast is revised up by 20 billion yen to 920 billion yen. As announced on September 11th, the share repurchases amount was increased by 200 billion yen up to 400 billion yen, and extended the repurchase period to the end of February 2025. Fiscal year 2025 first half core operating cash flow by segment. The main changes in COCF, core operating cash flow by segment, compared to the previous period. Consolidated core operating cash flow for the first half was 538.1 billion yen, a year-on-year increase of 63 billion yen. In mineral and metal resources, COCF increased by 14.3 billion yen to 192.1 billion yen, mainly due to a decrease in tax burden. In energy, COCF increased by 107 billion yen to 184.5 billion yen, mainly due to an increase in liquefied natural gas-related earnings, such as dividends and trading. In machinery and infrastructure, COCF decreased by 41.9 billion yen to 73.8 billion yen, mainly due to a consolidated subsidiary becoming an equity method investee and an increase in taxes associated with asset sales. In chemicals, COCF increased by 18.2 billion yen to 42.5 billion yen, mainly due to improved performance in consolidated subsidiaries and trading. In lifestyle, COCF decreased by 15.3 billion yen to 14.4 billion yen, mainly due to lower dividends from equity method investees. Especially core operating cash flow significantly increased by 107 billion yen in energy segment, thanks to liquefied natural gas business in UAE. This is expected to continue in the second half of fiscal year 2025. Shareholder returns policy. The share repurchase amount was increased by 200 billion yen this September. As a result, shareholder returns as a percentage of core operating cash flow during the current midterm management plan period is expected to exceed 45%. Mitsui's goal is to achieve sustained ROE growth, by increasing profits through investments for growth and midterm initiatives, while also enhancing shareholder returns throughout the process. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,135 yen as of December 6th, and the US dollar stock price is $420.11 as of December 6th. Current PBR is 1.22 and PER is 9.9. Dividend yield is 3.19%. Compared to the last few years, PBR and PER are a little higher, which means current stock price is relatively higher. However, stock price has risen, but the dividend yield has increased even more thanks to increasing dividends amount and share buybacks. Therefore, current dividend yield of 3.19% is higher than the past average. Conclusion. Like other general trading companies such as Mitsubishi, income is forecasted to decrease this fiscal year because natural resource market prices were way more expensive in the past and contributed to profit. But the progress rate is about 50%, and financial condition remains strong as always. We can also expect continued shareholder returns through progressive dividend policy and share buybacks. FY 2025 first half financial results was good.